Hey everyone, welcome. That was the closing bell for Wednesday, February 14th, Valentine's Day. Happy Valentine's Day, everyone. We had mostly a quiet day, but then we got some action towards the last couple of hours. So that's been a pattern for a few days now where things are quiet, things look like they're not really moving, or things look like they're moving in a certain direction. And then the last 2 hours or last 1 hour or last half hour, we suddenly start getting some momentum to the opposite side. So that's what happened today, starting at 11 o'clock. We really just started going bullish. And that was nothing too surprising until we actually crossed this purple line right here and headed upwards, because then we started to make new highs towards the last 20 or 30 minutes. And then we closed on the high today. So this is positive. There's positive momentum coming into the markets. They're waiting until the end of the day. End of the day is where the professionals trade. So this is most likely institutional money bidding things up. So it seems like there's more room. So we were talking about how, excuse me, how we were expecting after this pullback to this EMA 20, it looked like we could go up for another 1 to 2 weeks and that we might approach this second psychological resistance right here. And that would be a 25% move from this particular low. And that is usually where we start to run out of money from the market makers, or the market makers start running out of cash and they need to start selling their inventory in order to build up their cash reserves again. So it's looking like that is actually playing out. Today, we are closed comfortably above the EMA 8, so we did continue that movement upwards. We did cross above yesterday's high. We have a nice green bar. It's completely above the EMA 20. It's not completely above the EMA 8, but we don't necessarily look for that in the EMA 8 because a lot of times we can just trade along the EMA 8. We don't necessarily have to be above it. Here we are above it. Here we are above it. But we don't always trade above the EMA 8. Sometimes we just follow it. I'm trying to see it. So right here, we're just following it up. See? So I'm not too worried that it's not completely above. This is a good sign to me that this is a confirmation bar. So if you're familiar from a couple of years ago when I used to talk about confirmation bars a lot more often, it's been a little while since I've talked about it, but we bounce over here. We have a green bar that's closes above the previous day high. And with this as a confirmation bar, and we are pretty comfortable that this is a resumption of the uptrend. Some traders wait for 3 bars for confirmation. That would be kind of a lot before, if we're looking at this short-term trend right here. If you're looking at an overall medium-term trend, then sure, wait for 3 bars. But we're only looking at about 1 to 2 week time frame. So waiting for 3 bars is a little too much. So if we wanted even more confirmation, we would wait until we cross that psychological resistance or just below that psychological resistance. This morning we talked about 499.5 or 499.51 as an important level to cross above, because that's where we started to move sharply downwards in the pre-market yesterday. So if we can cross that or cross this psychological resistance, that would be another confirmation of this resumption of the trend upwards. For now, for me, this is good enough for me because I'm hedging myself along the way. This is good enough confirmation for me. So we would want to, if you have room, if you have cash to be allocated, we would point it to the upside and then make sure we have a hedge. That could be a pair, a long, a strong stock, short, a weak stock, or that could be a direct hedge with the VIX or with the actual indices. So let's take a look. I want to see what happened with bonds, because that will give me another indicator of whether or not this trend is resuming upwards, or how strongly it's moving upwards, or how long it might last. And I also want to take a look at VIX. Other than that, I'm not going to be too concerned about anything else going on in the market. The earnings that are coming out, there's nothing super big coming out in the next couple of days. And then the economic calendar, we're clear until Friday, and Friday at this point is not going to be too significant. This PPI could, if it's significantly down, then it could have an effect. But Other than that, we shouldn't. The CPI is much more looked at than the PPI. PPI gives an indication of what the CPI might be, but we got the CPI report before the PPI report. Its effect on the market this time around shouldn't be too large unless there's just a huge surprise. So let's go ahead and take a look at that VIX and see what we did. So we came down to 14.5. That's exactly where we were this morning, I think. We were talking about 3.5 up to go to 18 and 2.5 down to go to 12. So this basically, VIX didn't move. Let me just confirm that. So this morning, when we were talking at about 6 a.m., we were at, so probably a few minutes into the video, we're talking about roughly 14.5. So VIX didn't move all day, which is interesting. With a move upwards, we would expect VIX to move downwards, but actually VIX moved up. Let's see, this was 9 in the morning. Let's see where the SPY was at 9 in the morning. It was at a low. So that's not too surprising. Then we traded back down to where we started, but the SPY is up. Yes, SPY is up. So VIX, there's a little bit of divergence in the VIX. We saw that in the last couple of days as well. But today we still have that divergence. It's not huge, but it's a small divergence where we have the VIX flat, but the S&P 500 is going up. So that's an indicator that we probably don't have too much longer in this trend, although we'd still have this trend intact. The other thing is right here, we are looking at a low volume day again. Yesterday was high volume on that trade downwards. And then today we're looking at low volume. We'll probably get a little bit higher, but not quite to the moving average after we get all the dark pull prints and anything else that happens, or like updates after the market. So the official numbers will come in a little bit later, but it's looking like we'll probably be under that moving average still. And ignoring yesterday, we still have this downward movement in volume, whereas we have that continued upward movement in our prices. So that is divergence, and that divergence cannot last for too long. If we're going up on lower and lower volume, that's like saying I'm running, but I'm have less and less breath. After I run out of breath, I'm going to be slowing down and I'm going to stop. So I can't continue up at the same pace if I keep running out of breath. So either this volume has to pick up or our prices have to at least pause, if not come down. Overall, though, that VIX isn't telling us anything different. We're still looking at a 1 to 2 week time frame where we can continue to move upwards. The other thing I wanted to look at, I believe, was TLT. TLT chopping sideways. So this MA90 did hold today. So we got a chop sideways, and that's what we'll want to see in order for that trend to keep on going up for another week or two. Then we need TLT to keep chopping sideways, or maybe go up. I kind of doubt it's going to go up, but at least chop sideways until finally we break below this MA90, because that MA90 is sloping upwards. And as long as you have prices above the MA90, it can't turn downwards. So this MA90, it may just be that we chop until the MA90 crosses above it. And it doesn't necessarily have to be prices breaking down, but in any case, if that MA90 makes it above where prices are, that's bad news for fund managers that focus on bonds in particular. Fund managers will tend to have a mix of bonds and equities because they hedge themselves a little bit with bonds. But for the guys who are bond centric, meaning most of their portfolio is bonds, if not all of their portfolio is bonds, then it's kind of bad news for them to be below that MA90. It doesn't matter if that the MA90 went up to cross above the prices. instead of prices went down to cross below the MA90, it doesn't really matter. It just matters where prices are relative to that MA90. So no matter what, we're going to be in a not great situation for the bond managers unless the prices do start moving upwards. So again, assuming prices go sideways, which there's not going to be a lot of stimulus for it to move up or down unless that PPI report comes in really wild. So it's looking like the fund managers, bond fund managers, will be feeling a little pressure in the next week or so. And that's could coincide with a sharper pullback in the major indices. So we'll look for that. We'll just be watching that very carefully. In the meantime, we're just going to make sure we're well hedged. We talked about a VIX hedge this morning. We've been talking about QQQ hedges in the last couple of weeks. If you haven't refreshed your QQQ hedge, this is a good time to do it while markets are slowly moving upwards. So other than that, I think that is a pretty complete picture. We're just getting more and more confident that we have another week or two to the upside in the S&P 500 and the QQQ. And what we're going to be looking for is that IWM starting to cross above what we got above this pink line. So if we can get it, make it back above this pink line and hold above it, and then break above this high right here, then that might be a resumption of a trend upwards for the small cap stocks. And then at some point, we're going to wait for the small cap stocks to catch up with the large cap stocks and then surpass it. And then we will be talking about an actual bull market where it's a rising tide that lifts all boats. Right now, it's still very much pick. And for the most part, it's been the tech stocks. And I guess I might as well look real fast, because we did talk about it a few days ago, where if we look at let's look at the overall market first. Overall market, so this is not the S&P 500, it's not the NASDAQ 100, this is the market. So all the stocks in the market, so bar chart market momentum, it's the entire market, meaning all the stocks in the market above $2. So as long as the price is $2 or above, it's being counted in this particular indicator. And 51% of stocks are above their 50-day moving average. So we only have about half the stocks above their moving average. If we look at the S&P 500, it's about the same. 54% of stocks are above their 50-day moving average. So when I look at this S&P 500 right here, and I see that it's significantly above its MA50, well, only about half of the stocks are above the MA50 and half are below the MA50. So if we remove market cap, what that implies is if we're only looking at the number of stocks above their MA50, we should probably be right near that MA50, unless the ones that are below the MA50 are right below the MA50 and the ones that are above the MA50 are significantly above it, then this picture makes sense. But generally, that's not the case. Right? We should have a fairly even spread of stocks above and below and their distances above and below their MA50. And then that should even out, because then we have a very similar number of stocks above and below their MA50 as well. So we would be looking at a picture where the price action would be very much closer to the MA50 and we're significantly above it. That tells me that the larger cap stocks are the ones that are above. And so large cap stocks are still outperforming the small cap stocks. And we need to have a pullback to the MA50 in order for that to correct. As long as we're bouncing along this MA20, we're not going to be able to make that correction. But when we get that pullback, that's when we can see that starting to line up. Let's look at the RSP real fast. RSP is equal weighted, and you can see the equal weighted is so much closer to that MA50. Yesterday, we actually came very close to touching it. On that pullback yesterday, we came very close to touching it, and you can see RSP has been trading sideways instead of upwards. So that's what I was just talking about, where we remove the weighting, or we remove the fact that there's huge market cap. then we are a lot closer to that MA50, and this is not looking as strong, although it's not negative. We're above our moving averages. We have almost perfect rainbow. Actually, we do have a perfect rainbow. The only thing is that it's trading sideways, and it has been ever since mid-December instead of moving upwards. So the last 2 months of trading, rather than moving upward, stocks on average, they have only been going sideways if you remove their market cap. So if you remove the fact that the AI stocks, the tech stocks, the semiconductor stocks, the ones with really large market cap like Google, Meta, Facebook is Meta, Amazon, Apple, all those guys, they've been moving upwards, and that's why this looks, in the SPY, looks like a straight line upwards instead of sideways. So that is not strength. That's not strength in the markets. There's only so long that can hold up, where a few companies can hold up the entire index. That can only go on for so long. And then eventually either the rest of the market has to catch up to those guys, or those guys will run out of steam and start to pull back down. And if their market cap is what's holding everything up, even if the rest of the stocks just continue along whatever path they were moving, just the fact that those large cap stocks run out of steam and pull back to wherever the rest of the crowd is, that's already going to represent a drop in value weighted by market cap. And so the SPY will start to drop downwards. RSP might not, it might still chop sideways, but the SPY would drop downwards in that case. So we just want to watch that very carefully. We'll be watching the SPY and RSP just to see if we get a breakdown in the RSP, break below those MA50, then that's a sign that the SPY will break its uptrend. And what we'll see over here is that the number of stocks above the 50-day moving average will start increasing. And the number of stocks over here in the overall market, they'll start decreasing as well. We have been decreasing. So if I look at this chart, we went from 85 all the way down to 51. And then if I look specifically in the S&P 500, we went from 89 down to 54. And when we're at these levels, our tendency is to, at least over the next few months, drop down to roughly this 30 level, right? 30. Okay? So that usually happens pretty quickly, within a month or two. Every once in a while, it takes 3 or 4 months. So we'll just expect that this is going to pull back in the next month to 2 months, where we are going to get a pullback all the way to 30. So it's looking like, we can't say for sure right now, but it's looking like in the next 1 to 2 months, we could have a correction, because we need to get beyond that MA50. We need more than 50% below the MA50, and that would mean that SPY would go below its MA50. So we are looking at correction territory at that point, because this down to the MA50 was 5%. That's just the large end of a pullback. If we're talking below the MA50, then we're talking correction. So it's looking like, for another 2 weeks, we could go upwards. But if we're looking at the 1 to 2 month time frame, we're looking for a correction in the market sometime. I already said the time frame, right? 1 to 2 months. So things are looking good for now in the very short term, but we want to stay hedged, because once we get that 1 to 2 weeks upward movement, that could be the beginning of the correction. Or we could consolidate for a few weeks, and then we could get the correction, or we could just wait a little bit longer. I guess we could conceivably do another pullback to the trend line and follow the EMA 20 up one more time before we could get the correction as well. So all of those are distinct possibilities. I would put them at roughly even probabilities. So instead of trying to pick which one is going to happen, we are just going to prepare for that and just say, okay, we're just going to stay hedged. We're going to keep pointing upwards until we actually break. And in the meantime, we're going to stay hedged along the way. So hopefully that's a nice, clear picture for you guys. Have a wonderful rest of your day. For those of you who are in the US and celebrating Valentine's Day, have a wonderful evening, and I will see you guys tomorrow morning.